Here's the S&P 500, and the S&P 500, there's no doubt that if you connect the low from March 2020, right, and you go through here, we broke it, we went back, retested, now we're kind of hovering in no man's land. So the ultimate nature here is if this CPI data comes in hot, we're basically looking at the potential for a bigger move down that takes us all the way down to this 3390, 3380 level, which is that pre-COVID February 2020 high. If it's a little bit less of an issue, there's a chance we could break above this 3,900 and maybe head back to this level around 4,120. So there's a lot. I feel like there's a lot of people that are just waiting to hear this number, and it's either going to be a massive sell-off or a massive rally.
Yeah, exactly. It's going to be an exciting morning today, and nobody knows. Nobody knows what we're Let's take a look at Bitcoin.
As we were consolidating in this channel, so number one, it was a bearish channel, right? So ultimately the move was going to be down, and obviously we started. I was in the camp where we would at least rally to 22.5 here, this pivot high before that dump occurred. The black swan event of FTX definitely didn't allow for that. And then once that hit, I mean, it's just been down, down, down. So the fact that we've broken this low now, to me, tells me, sure, we're going to get some technical bounces, maybe a retrace of this trend line, maybe if we're really lucky, a retrace here. But I still think that you have a 12 to 13,000 high target on this market. And I hate to say it, but I'm leaning more towards a lower target now of maybe sub 10,000. Potentially worst case would be 3,500. I'm hopeful that that doesn't happen, but I think there's so many individual investors and traders now calling for 12 to 13 that it almost makes me think that, as we know, it's either not going to get there or it's going to go lower than that. And then I zone into the 10,000 level because I could see a lot of people putting stops right at 10,000, and it almost makes me think they'll flush it right below 10,000 quickly before a bottom is in.
At what point do you think we get there to where the markets can start understanding recession risk and start pricing that in?
Yeah, I think it's going to be in the first quarter of 2023. So, we still have seen generally strong jobs numbers. I mean, under the hood, we're seeing a little weakening. I do think inflation data at some point is going to start to ease, right? So we're going to see lower inflation. I think that's going to give a false sense of security to the market. We'll get some sort of rally out of it. But then I do think that you start seeing that weaker economic jobs numbers really start to bite. So, end of year, early 2023. And I think there's going to be a reckoning day for the stock market where investors are all of a sudden going to be like, wait, we thought low rates or no more hikes was good, but now we're in a recession and we look to the Fed to start lowering, and the Fed turns back to us and says, hey guys, inflation's still stuck at 4%. We can't lower and create a 20% inflation point. So you have to just deal with this recession. And if you look back historically, the market in the last 20 years or so, we've never had that situation where the Fed didn't come to the rescue. And I think that's going to be the reckoning day where we get in a recession, things just continue to get slowly worse and worse, and the Fed's not able to stimulate like they used to.
Yeah, they're not going to rescue the markets, at least not at these levels. It's a lot of people have been calling, this is the bottom and saying that it's exactly like that bottom of 2018. And then, after that consolidation, we'll be off to the races. And I want to kind of show you something that I've heard. This is November 8th, election day. 2018. This is November 8th, election day. My thesis has been we've been in a pattern like this, waiting for final capitulation, because we haven't seen panic. We haven't seen mass sell-off. We've seen too many people calling for the bottom, too many people still looking for this to be the bottom and this to happen in this environment of the Fed tightening, raising interest rates, global macroeconomic recession, record hyperinflation in a lot of countries. I mean, there's just war everywhere, potential, other wars with Korea, North Korea, and, China and Taiwan. All of these events that people are expecting, the same old to happen and thinking that we're right here.
That's absolutely great. That analysis is great. In fact, I just brought that up. The Bitcoin chart was fascinating because I just a couple days ago, I did an interview and I talked about that exact thing. And what was amazing about it is if you look at the time on your chart, right? So in 2018, that consolidation, that quiet period started in June. And when it broke down? In November.
Yeah.
And here, same thing, June, November, and there's your breakdown. And this,
the other thing was losing the 200-day moving average. And then now the 100 became your main resistance all the way down the trend. Same thing back here in 2018. Once the 200-day was lost, then the 100 became your main line. That last tap of the 100 was the final capitulation. And we just had the last tap of that 100.
And then if you go back to 2018, what percentage did we drop? 50%? Was it a 50% drop there from that breakdown? I think it was, right?
50% drop, and the bottom, the bottom of that drop came in around December 16th. So, a little bit over a month.
Just like me, is that there's no perfect, magic sauce, right? There's no guarantees that we're exact, but history tends to rhyme, if not repeat, because human nature doesn't change, right? Greed and fear. And so, as people are watching this interview, I think it's important to recognize that let history guide you. And doesn't mean go all in at these levels, but you start nibbling around the levels, and this way it gives you opportunities to add if it's not quite the exact point. I do think people have to remember that bear markets give you the best opportunities in investing, right? That's where you get things at discounts. So it's, people say, oh, bear markets stink. Well, yeah, if you're a long-term investor, it's no fun. But again, if you're someone who's looking to accumulate good quality, this is the market to do it in.
What is your thesis on returning back to all-time highs? Do you think that can happen? How long do you think it'll take for that to happen?
So my guess is when the dust settles, it'll take us 2 to 3 years to get back there at least. I think it's going to take longer because I think all the past cycles that the Fed was printing money, right? So we're not going to have that at least for I'm guessing for the first year or two. I think if things get bad enough, the Fed will start printing, which then could trigger that next move up. But I think it's going to be a little bit longer of a bear cycle than we're used to because of the lack of the Fed. And I also think that there's going to be a lot of investors that get burned, and these FTX type scenarios, Terra Luna, there's going to be people that say, hey, listen, I bought in at 55, 60,000 and I exited at 12 or 15,000 because I was panicking. I don't trust this to go back in until a bull market comes along that makes them so greedy that they finally jump back in. Case in point, COVID brought back a lot of investors in the stock market that hadn't been involved in years because they got burned in other periods.